this is Surya Saha and welcome to the Insurtech Story Podcast, the platform to spread knowledge on insurance innovation, digital disruptions and entrepreneurship. Our website insurtechstory.com, and we are available on Spotify, Apple and Google. Today we will discuss on how AI and ML is revolutionizing the underwriting and risk assessment process in life insurance. And for now, I'm delighted to welcome our guest Mahesh S, who is the Vice President Products at Artivativ, which is a global risk and decision-making platform that automates human decisions in insurance and healthcare to provide efficiency, transparency, risk assessment, personalization, and digitization in the entire life cycle of operations. In his role with Artivativ, Mahesh is responsible for ongoing development of smart technology-driven underwriting platform embedded with AI/ML-based risk management models and rule engines. Mahesh is a senior leader with over 29 years of experience in the BFSI sector, specifically with the life insurance industry in areas of operations, technology, and administration. In his past experience, Mahesh has worked in senior leadership positions with companies such as Future Generali Life, Tata AIA Life, and HDFC Bank. He is a domain expert in life insurance, and his expertise is in running large-scale operations and implementing cutting-edge customer-centric solutions and processes. So Mahesh, welcome on board, and we are truly excited to have you for the show.
Thank you, Surya. The pleasure is all mine, and thanks for having me on this podcast today.
So would you like to tell a bit more on what you do at Artivativ and what's in for Insurtech at Artivativ?
So, Surya, as you have already seen, that I've been in the line function with insurance manufacturers all these years. So over 20 years of experience, and I think I'm at the right time, at the right place at the right time with Artivativ, because I can see that post-COVID specifically, there has been a significant digital adoption in the industry, which has always been known for traditional methods, paper-driven processes, and face-to-face interactions and risk assessment based on physical document verification and going through physical documents. And of late, in the last decade, there was some amount of workflow processes that have been implemented by almost all companies. But post the pandemic, there has been a heightened need for people to work remotely, people to work in hybrid atmospheres, people to be able to assess risk without maybe having the opportunity to meet the customer face to face at times and still run the business. And the best part of it is that there has been a huge amount of adoption in technology. The industry has seen a growth in India. So this year, if we look at the life insurance industry, it's growing in a rapid manner, and it augurs very well for future as well. So this industry is set to grow in a big way. And I think this massive growth, which is likely to happen in the life insurance space, is going to be aided significantly by technology, because technology is what is going to help us grow this industry in a big way. And as we know that the penetration is very low in the Indian insurance market, less the number of insurable people. And when you look at how many of them have actually got insured, the penetration is very, very low. True, and if that penetration has to really broad base, I think the presence of the insurance companies has to grow, deepen and wider. And that in a large way is going to happen with technology. And I'm very happy that, having seen the other side of running business, now with Artivativ, I'm looking at the business from a completely different perspective, where technology can play a big role. And Artivativ promotes building smart underwriting platforms using AI ML models as a core in its engine, and helps in decision making by using data, analytics of data, and by looking at historical trends of data and predicting what the outcomes are likely to be. So it's a very exciting time when I'm part of this Artivativ and trying to create an impact in the industry to really grow the business by using technology. So my role is to develop the underwriting platforms for Artivativ and offer solutions to the insurance industry at large. It cuts across all life, health, and general insurance businesses, but my experience is predominantly in the life insurance space, and we are we are driving, we are connecting with a lot of insurers and telling them about the benefits of this smart technology which is available to be used. So my role is to build the product, develop the roadmap, and to connect with the industry at large to showcase the benefit of it and slowly push the adoption rates in this regard. So that's what I do.
You have mentioned a very significant point there, that change in perspective. I think that is something it's very much needed to actually bring in the right adoption and the fast-paced adoption of technology. Because technology, when we say digital transformation or technology transformation, it not just essentially means that you employ the right technology to bring in all the changes, right? So you have to have the cultural change, that to adopt those technology, to have the right people, to have the right mindset, and that needs the right perspective to do it. So I think you have
You're
mentioned a
absolutely,
very significant point there.
you're absolutely right, Surya. I think the executive sponsorship to adopt technology is extremely critical, and I think in this case, I fundamentally believe that there's a lot of top-down approach that's going to help, including a bottom-up approach. There is a so it's the executive sponsorship at a CXO level is extremely
Hmm.
critical. The underwriter level is extremely critical, and at the bottom level, it should not be seen as a threat, and
Right.
it's something which complements the entire functioning of a risk assessment process or an underwriting or an insurance process. So it is extremely complementary. The technology innovation that we are really talking about, it's going to complement the current underwriting practices. Rather, it's going to enhance the underwriting process and
True.
enhance the risk assessment process. So I think executive sponsorship is extremely critical. And I think one very critical point here I would like to highlight is that the entities which adopt earlier will see the benefits faster.
True. True.
And I think that is extremely critical because this entire deep learning and machine learning processes require an experience to be built over a period of time. Apart from looking at the existing historical data, there are new
Hmm.
experiences that are adding on day in and day out. Nobody anticipated that COVID will shut us down,
Hmm.
shut the world down for 2 years, but there were extremely valuable experiences that accumulated during the COVID period in terms of customer behavior, in terms of profiles, customer persona,
Hmm.
who buys insurance, who doesn't buy insurance, who should be offered, who should not be offered, which are the adverse profiles. The definition of adverse profiles completely underwent a change. Customers'
Hmm.
expectation in terms of speed and efficiency has undergone a significant shift. So I think uh, this next 5 to 7 years of this decade is going to
Hmm.
see a change in transformation, and early movers here, the entities which are willing to adopt this technology earlier, will be the significant beneficiaries. And I predict that in the next 5 to 7 years, this will become a
Hmm.
hygiene. Without this, you may not have an insurance company which is able to run its operation and grow large. You cannot have a
True.
small and beautiful niche insurance company. You need to be a big and ugly
Hmm.
insurance company. You have to be large, and if you have to grow large, you have to adopt technology in a big way. And
True.
the early movers will see advantages.
True. Mahesh, just to talk about what on the topic of AI ML, the global AI market is projected to grow at a CAGR of 42.2%, which comes to around 733 odd billion dollars by 2027. And AI ML use in life insurance is certainly bound to grow based on these. So, based on the current trends, how you think AI ML can fast track its adoption within the life insurance industry?
Yep, I think you have touched the nerve center of the question, actually, and it's a very important point. Globally, we are seeing the adoption of AI ML technologies increase. Uh, India is seeing a good improvement and growth in its life insurance penetration. There has been a year-on-year growth that we are witnessing, despite all the challenges that we have seen in the last couple of years. As I said earlier, executive sponsorship is something extremely critical. But once there is executive sponsorship and there is an alignment, I think what is extremely critical is to show the business outcomes and the benefits. This technology has to resonate with the senior leadership team that yes, this is here to stay and this is here to bring large impact and business in terms of business benefits to their business. And when I say what kinds of business benefits should really be there, I think we talk about risk assessment. So there was a process protocol which is being followed right now, but how is that going to get transformed by technology or AI ML? I think that business benefit or the business case for that has to be very well laid out for the CXO uh, uh, leadership team and the senior underwriters to say that this is the manner in which the risk assessment will be complemented by using a AI ML model or using AI ML technology. Why? How does this risk assessment really improve? I think there is a clear benefit that we have seen in terms of fraud detection, in terms of early fraud detection at the time of onboarding a customer, in terms of assessing and kind of categorizing customers into different customer persona and defining which customer persona would be which kind of a product and a sum assured or a premium limit will be suitable for a particular customer persona. So
Right.
you can identify the gaps that are there in insurance coverages for customers by categorizing customers into different customer persona and then go on to hyper customization. So a lot of this hitherto in the past was being done manually based on intuition, based on gut feel. But there is so much of data which is available to tell the trends and to tell the patterns.
Right.
And I think the key lies in studying those data, the historical patterns, and predicting how the outcomes are going to change as things move on. I think that's extremely critical. The second big piece, Surya, which is extremely important and that business benefit has to show, is there is an marked improvement in efficiency and productivity. So when we talk about using such technology like a AI ML model or a smart underwriting platform, we see that there is a that it aids in decision making, which is the core of risk assessment. What decision do you take? At what price do you price a proposal? And how much premium do you charge? Based on financial indicators, based on medical indicators. So how do you charge? So this entire process, which was completely manual and completely driven by intuition and skill, is going to be complemented by bringing in data. And I think that becomes extremely critical. So there is an improved efficiency and consistency in decision making, and there is an ongoing learning from the mistakes. So if there are mistakes, if there are opportunities to improve, that learning process is built into these models. So as you keep taking decisions, the models keep learning more and more,
True.
and it helps you to take better and better decisions consistently. And I think that I think is a big benefit that one has to be able to showcase. The front and center or the fulcrum of all of this is to build a profitable portfolio, and insurance companies have to make profit. The shareholders have to gain. I
Right.
think when you start assessing your risk in a much better fashion by knowing your past experiences and by studying the patterns of uh, data which is available externally. When you integrate all the data, internal data as well as external data, you start to build a better profile and perspective about the customer, and it helps you to price the product better. It helps you to onboard good lives faster, price the adverse lives in a better manner, and that helps you to build a profitable portfolio. Once you build a profitable portfolio and it impacting the bottom line for the insurance companies, that is when the technology will really play out its complete benefit, and this has
True.
to be showcased and shown. I think the last piece and the by far the most important piece is the customer. The customer today is getting experience from all kinds of e-commerce platforms, all kinds of experiences around in the ecosystem, and their expectation from an insurance company is going to be no different. They expect fast results, they expect quick turnaround times, they expect extremely easy processes, quick decision making, and an ease of doing business with insurance companies.
Right.
And I think with technology, with better insights coming to the underwriting and claims assessors at the initial stage itself, I think it is going to help faster decision making and giving the customer the right experience, telling the customer what is the gap that the customer should really be better advisory services from the distributor, nudging the distributor to with the right inputs so that they can talk the right language with the customer. They
Right.
can talk about the right benefits that the customer should look at, which is at the end of the day extremely critical. So once the customer sees benefit in it, there is going to be a kind of push to the entire ecosystem to start adopting technology and replicate it over and over again. And I think
True.
these are various factors which have to come together
Hmm.
to for the industry to really adopt and say, yes, this is something which has to be done. Without this, you cannot really exist in maybe 7 to 8 years or 10 years time. Without using AI, ML, and smart solutions,
Hmm.
you will not be able to match up with the requirements of the market. So this adoption has to be done now. It has to be the business benefits and the outcomes have to be showcased by in terms of profitable acquisition of portfolio, in terms of improved persistency, in terms of improving claims experience. This benefit has to accrue, and all of this is going to lead to a lower cost, lower unit cost of transactions, and at the end of the day, there is going to be a positive impact to the bottom line of the insurer. So, and the customer is going to get the services and products which
Yeah.
they attach themselves to, they value. I think that is extremely critical. Today,
Sure.
a lot of cost is incurred, and at the end of the day, it's all priced. The cost is
Yeah.
priced for in the product. So as you start cutting down or optimizing your cost, it will start reflecting in the
Hmm.
value or the cost at which the services and products are delivered to the customer, and that will make insurance companies easier to deal with. And I think this is the benefit that really has to be showcased for the
Yeah.
industry to start quickly adopting these technologies.
I think you have mentioned on the pricing part. I think one of the major change, transformation that technology will bring forth is, helping insurers to adopt to flexible pricing as per the market relevance and the need. And
Absolutely.
insurance pricing is a very, very critical aspect of the entire, value chain that the industry has. And what use cases we normally see have come across is primarily in the uh, PNC or the general insurance sector, but
Right.
is very less that has been showcased, or perhaps it's happening but it's not in the limelight. It's the life insurance. So definitely I am personally very keen to see what's in for the future for the life insurance segment of insurance industry. And overall, if you see, specific to this industry, data and analytics are crucial to this underwriting process. And underwriting is again one of the key element when we again talk about pricing, right? So, and pricing and risk. So underwriting as a most crucial step, not just in life but in other areas of insurance, as it involves risk analysis, pricing, and others, as I mentioned. What would or rather, what would be your take on some of the industry best practices for AI in life insurance underwriting, especially?
So, Surya, you're right. I think the customer has to be every customer risk can be priced for, and and when it comes to life insurance, we have seen a kind of opaqueness in the
Right.
pricing. It is a one size fits all approach, and the products are very much straitjacketed, I would say, even today. But we are seeing a shift, and we have, as you said, there is already regulations and there are sandbox products in the non-life space where the motor insurance pricing can be priced as per the driving habits of the customer. So it can be customized to that extent, and those allowances are being allowed. We have seen in the health insurance space already, the regulator has said that you can launch the product and you don't need a prior approval. So there are simplifications that are happening. When it comes to the life insurance space, we have recently seen that the regulator has taken a lot of steps to really inject technology and technology-based uh, processes being implemented with insurers. And there is a hackathon which is likely to be launched in shortly by the regulator, where they have given various kinds of use cases, which clearly uh, uh, you can infer that the industry and the regulator are all up for adopting technology and new age technology. And
Right.
you cannot, the new age technology is about data, is about analytics, is about artificial intelligence, machine learning, deep learning, blockchain. These are the new age technologies that one is talking about. And there is this absolute, I would say, consensus in saying that these technologies are the way forward for being adopted, and the industry has to adopt it holistically. Now, when we look at what are some of the industry best practices, we have seen, in my experience, over the last 7 to 8 years being in the industry, and now with Insurtech such as Artivativ, I have seen that some of the deep learning models, the machine learning and the NLP models that are there have been used in multiple use cases. So today, the onboarding of the customer, but if not for such models and technologies in place, the onboarding would have continued to remain to be a paper-based and a
Right.
manual
Right.
intensive process. So that manual intensity of the process has been largely eliminated, because today I can get a KYC document
Hmm.
or a know your identity document or a PAN card or an Aadhaar card of the customer, and nobody needs to sit and physically
True.
match the card and capture the data. It's all done automatically. So there are models, the deep learning models, which look at a document and detect that it is an Aadhaar card or a PAN card or a driving license, and
I
pulls
think,
out all the data and does. So that has already
yeah,
been done by
true.
industry, and that
But
benefits.
I think underwriting segment, and please correct me if I'm wrong, I think that this paper-based work is one of the major challenge of the underwriting system, not just in India, globally. And how
Absolutely.
you digitize the paper-based data which has been gathered from years and decades and perhaps move it to the cloud, that's another big challenge.
Absolutely. In fact, Surya, that is one aspect of it. How do you
Yeah.
use all the data that is available to you to make some logical decision for a current? At the end of the day, the underwriter is worried about the proposal that he has on hand. What does he do with that proposal? That is
Right.
that is where the rubber hits the road, where you have to help the underwriter make a decision. And there is yeoman's of data available in your databases in cloud and external
True.
data sources. The trick or the challenge is to
Mm.
boil down all of that data, summarize it in such a manner, I find out certain inferences, and help the underwriter make a decision on that particular proposal that he
Mm.
has on hand.
True.
That is one challenge. Today, one of the challenges is that even with all the information which is available on the proposal form, without even looking outside, there are it is humanly impossible for the underwriter to assess all of that information which is on the proposal form and the financial documents or the medical documents
Mm.
that have been given by the customer and make a decision. It's impossible for a human being to consistently keep looking at one document after another and make sense out of it and make a decision. Even
True.
that itself, you can understand, is a challenge, right? So there are two aspects that one is trying to address. One is to
Mm.
look at your historical patterns of
Right.
data, get certain inferences and summary or
Mm.
gist out of that, and look at what should be the decision on the current case, and very importantly, look at what is available in the current proposal. What information, if a customer has given a financial document, every important piece of information from that financial document should be summarized in a manner which the underwriter is
Right.
able to make a decision based on. So these two things have to come together. And the third piece is to see whatever decisions are being made on this basis, how is it impacting my future outcome? And if it is resulting in a better experience, continue to do what you're doing. Continue to apply this model. But if the future outcomes in terms of claims or in terms of persistency are not improving or not improving at the rate at which you would want, then learn from that and change your current process.
Right. Right.
Now, this can happen only when you have technology in place. You cannot go and tell every underwriter, you know what, a claim occurred because of the following reason, so now you should look at this in this way. So this manual process is not likely to work, is not going to work. It will not give you the best outcomes. So if you need the best outcomes consistently,
Mm.
you have to start using data. And we have seen the industry start using data in some form or the other. We have implemented persistency scoring models. We have implemented risk scoring models. We have implemented deep learning models to look at various kinds of complex documents and understand what information is there. We can look at medical reports, diagnostic reports, and cull out all the values from that and use those values to compare with the standard ranges and then assess whether this customer is in good health or not. We can look at a photograph, do liveliness check, do face detection checks. We can look at signatures and match those signatures with other documents and give a complete view to the underwriter in terms of every single aspect of data which is available. And on top of that, we can connect with external sources of data, publicly available data, and pull that information to synthesize with the current data and provide an information or provide a view to the underwriter with a recommended decision. So these are the use cases and the best practices which are implemented in bits and pieces by some entities. Some entities are in studying the impact of such tools and technology, and some entities are way up ahead in terms of implementing. So there is a whole spectrum of companies which are in different stages of adoption. But I can say with a reasonable degree of confidence that 60 to 70% of the organizations have implemented some parts of it already.
Right.
But can I say that everybody has implemented everything that is available? The answer to that is no. And that is where the opportunity really lies for the industry to really adopt technology. And as I said, there is a whole range of benefits that one can derive, right from building a profitable portfolio to optimizing your cost to giving better customer experience or a distributor experience. So I have seen in terms of best practices, a lot of companies have implemented such models for fraud detection. So the regulator had made the verification calling process a mandatory process for certain segments of customers. So a couple of years back, the regulator said every customer that you acquire in the life insurance space, you need to do some kind of a verification call, either through a video or a telephonic call. So we have taken it one step ahead. We are not leaving it only at a call. We are saying if there is a call, there is a video. Let us study that video and let us compare the face of that video with the face on the KYC document and see whether that is matching. Let us look at the video and estimate whether the customer looks the age that he has quoted on the proposal form. Is he likely to have the right BMI? Is he likely to be a smoker or a non-smoker? So all these kinds of inferences can be drawn through the deep learning models that we have in place. And these are use cases that the industry has already started implementing. I would say more than 70% of the companies today have some kind of a face detection or a face matching algorithm in place. It may not be the ideal, it may not be the best, but these are opportunities that Artivativ is here to capitalize. These are opportunities that one can really benefit out of from an industry standpoint. I can say that there is a huge work that is happening in terms of codifying all the medical values. But this benefit is something that the industry has to start taking, because you or I cannot look at a medical report and remember every single value and infer what will be the prognosis of this value and what underwriting decision should be taken. It is practically impossible or difficult for any human being to do. So, and this is where I think technology will play a huge role, and I can see this adoption significantly jumping. And this is the way to go.
No, absolutely. Of course, you have mentioned some groundbreaking solutions that Artivatic has come up with in underwriting and other elements of life insurance. I think insurers certainly need that, especially the incumbents, need that, internal push for partnership with Insurtech companies to actually get such benefits of technology know-how. So what's currently in the industry, you cannot just walk through if you're having a solo play. The partnership or teamwork with external people who are actually experts in the emerging technology areas are the way to go, and that's how you're going to not just capture the market, you're going to revolutionize the future and capture the Generation Z, who are the new age customers.
Absolutely right. You're absolutely
And
right.
India is the perfect, hotspot for this.
Absolutely, absolutely right. With our growing Gen Z population, I
Yeah,
think unless and until technologies, there is one, there's one another important aspect, Surya. Even for a company to retain talent as employees, the companies have to be seen as someone who is forward looking in terms of technology, because
right.
today's Gen Z employees don't want to work with organizations which use archaic methods.
Yeah,
They
yeah,
want to work with organizations which use the latest technology, which make simplify the work for the employee as well. So you need to use technology which lowers the burden for the
yeah,
employee, so the employee becomes more productive
yeah.
and becomes more I would say profitable for the organization, and
Hmm.
the employee is able to do value add to his skills.
True.
And that value addition in skills from an employee perspective is also going to happen when he's using technology which saves him from doing mundane work. Nobody wants to capture data.
No.
Nobody wants
True.
to read data and infer. He would rather get all the information in a boiled down to a simple in nice 360-degree view recommendation and the inferences that he has to see and make a decision, and then counter that decision in case he is not agreeable with it, because that option is always available. Because if you don't agree, because the machine is reading information in a certain way, it doesn't replace human being. The human intelligence is not replaced
Yeah,
by the machine. So human intelligence is all pervasive. It is going to override the machine intelligence. The human intelligence should be used to improve the decision making process and improve the quality of decisions. And that then becomes a learning for the machine to learn from.
yeah.
And then the human being starts thinking the next step. Even from an employee standpoint, I think adopting technology becomes a key. Of course, from a customer standpoint, I think there is no way out. You have to adopt technology.
No, absolutely. I mean, skill development is also another area that defines the future of work, not just adoption of technology in itself. So I think some
Right.
fantastic discussion, some points that has come up for our listeners, and I would really recommend everybody who is listening to this episode now um, to ensure to check out Artivativ.ai, which is revolutionizing how analytics, AI, ML can be implemented in the life insurance space and insurance sector as a whole. So thank you, Mahesh. It was a fantastic discussion, and thank you for sharing your thoughts today. It was truly, truly a delight to have you as our guest.
Thank you very much, Surya. Thanks a lot. It was my
And
pleasure.
thank you so much. And lastly, to wrap this up, thank you for listening and see you at our next episode. Take care and stay safe. Goodbye for now.